John Ulzheimer is known as one of our nation's most recognized credit experts. Having worked for 28 years in the credit industry, John has become one of the most prolific speakers about credit and the go-to authority on answers to credit-related questions. Credit Countdown with John Ulzheimer.
Hey there, this is John Ulzheimer. I am a consumer credit expert. I have got almost 30 years of experience in the credit industry. Spent time at FICO, which is the company behind the FICO credit scoring system, and Equifax, which is one of the three generally recognized credit reporting agencies in the United States. And today's question that I get quite often, especially from younger people, is why do I have so many student loans appearing on my credit reports? And I think the reason I get that question so often is because when people go to college and they take out student loans, they are under the reasonable impression that they have taken out one loan to pay for their college education. And then ultimately when they graduate or the loans come out of deferment, they start making payments on them. They only make one payment, meaning that they don't write six checks or make 6 online payments to the loan servicer. And so when they pull their credit report, they get a surprise, I guess is the best way of putting it, to see that they've got multiple entries on their credit reports that represent student loans. And so the question is, wait a minute, why do I have 5 and I only went to college once? So there's a valid question. It's a valid question, and there's an equally valid answer. So student loans are credit reported, or technical term is furnished, are generally furnished by a servicer. So Nelnet, FIA, Great Lakes, there's a bunch of other, Sallie Mae, there's a bunch of other examples of student loan servicers that furnish information to the credit reporting agencies on behalf of the Department of Education. And the reason that they report so many different times on a credit report is because student loans are furnished on a disbursement by disbursement basis, not in aggregate. So if you went to college for, say, for example, 4 years and you took, 8 disbursements to pay for 2 semesters per year, then on your credit report, what it's likely going to look like is 8 separate loans, 1 per each disbursement. And so that's answered the question to the why do I have so many student loans on my credit report. What you'll also notice is that each of those student loans, the dollar value is equal to the disbursement amount. So it's not as if it's reporting 8 times for the entire amount of all of your student loans. And so it really does represent a disbursement by disbursement structure to represent all of the different small loans that you took out. So this can cut both ways as far as the effect on credit scores. That's usually a follow-up question is, well, how does that affect my credit score? Isn't that killing my credit score? And the answer is absolutely not. It's actually helping your credit score. Credit scoring systems love to see good stuff on credit reports. FICO, VantageScore are equal in that respect. So if you have multiple student loans appearing on credit reports that are all in good standing, that's actually a positive thing. Obviously, if you start to miss payments, then all of those loans are going to start showing as being delinquent and possibly going into default if you just stop making your payment. So when you make your payment every single month, that payment is dispersed across all of your loans by your servicer. So you don't need to worry about doing that. They're responsible for doing that on your behalf. So the other question that I commonly get about student loans as well, isn't all that debt affecting my credit score? Student loans are what's referred to as an installment loan. So an installment loan is similar to an auto loan or a mortgage where you have a fixed payment for a fixed number of months. So for example, $200 a month for 75 months. That's an installment loan versus revolving like a credit card where you have a different payment every single month based on whatever the balance is, and then it kind of goes in perpetuity, meaning that you can use it forever until you or the credit card issuer chooses to close the account. Where installment loans have a finite end date, and once it's paid off, that loan is done and closed and the term is exhausted. The debt has been fully exhausted. So that's why they show up. And installment debt is generally pretty benign to credit scores. So you can have a very large amount of installment debt, and that debt itself is not going to be problematic to your credit scores, obviously, unless you go into default. And so what ends up happening normally is when people pay off those student loans and they go to zero balances, their credit scores don't really go up very much because the debt wasn't bringing their scores down in the first place. And so by paying it off, you're not really recovering a large amount of points because you weren't losing a large amount of points in the first place. So hopefully that clarifies the issue of why you have so many student loans on your credit report. If you have any other questions about student loans, drop them in the comment section below and I'll do my best to get to them. Thank you very much for your time, and we'll talk again soon. Thanks a lot.
For more videos and credit tips from John Ulzheimer, go to www.tradelinesupply.com.